All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. I wanted to share with you quickly my thoughts on the the whole situation, what's happening right now with tariffs, with the upcoming NFP number as well, and the Fed. Look, before we jump into all that, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest, but yeah, I think we are going through a very interesting period right now. There are a lot of economic shifts, and yeah, I think that this could, the second part of this week could be quite an interesting one. So, also before we jump into all that, let me just quickly mention our website, Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, I want to pick up on this right now. So, the Japanese index now. Maybe not everybody's looking at Nikkei 225 a lot, but I think that's quite important. Look, Japan got kind of slapped, was in that list, which got the 24%, if I'm not mistaken, and yeah, 24% reciprocal tariff rate apparently from the U.S. So. And we're seeing, yes, it's having its effect, its negative effect. We're seeing a further decline. Look, I talked about this one in my morning webinars, which happened on Monday, Wednesday, and Friday. Check them out, the live section on our YouTube channel. But basically, I talked about Nikkei and I said, look, I'm going to be a little bit more on the bearish side if we do start clearing some key areas of support. Initially, I talked about this area, the 37,269 tick. Then we clicked and cleared this 36,000 zone. And by the way, I'm looking at the cash index here. Then, yes, we started clearing that 35,111 area, which is basically the low or the lowest point of September of 2024. So we cleared that one. So yes, at the moment, the problem here is that the index is drifting lower. Look, it also kind of ruins the situation for the BOJ, the Bank of Japan, because again, those guys were planning to go for some hikes, and inflation is on the higher side, and now they're a little bit in the pickle because again, the stock market is dropping. They will need to. They will probably need to say that, you know what, they're going to postpone their plans of hiking at the moment. Probably they're just sticking to that same plus 0.5% interest rate, because again, as we know, that there were, like I said, there were some thoughts of going for a hike because inflation is picking up, and now it's like I said, now it's becoming a little bit of a worse situation here for Japan. Let's see how they will play this game. Of course, they will try to do the same tariffs as well. I mean, on the U.S. goods, but or maybe, just maybe, this is another thing that to consider, is that I think that these tariffs are mainly done for the idea of, let's say, creating exceptions basically. Now, let me jump into the US stock market very quickly. So the Dow Jones, as you can see here, drifted lower, is clearing now this upside line. I talked about this in one of my live webinars recently. And we're clearing this area, so now the next target seems like it could be the 40,650 territory, which is basically near the lowest point of March. So that's what I'm going to aim for right now, the lowest point of March. And then if we clear that one, well, that's where the interesting bit comes in, and we could start aiming for that psychological 40,000 zone, or maybe even a little bit below, and that's on the Dow. So what I meant by the exceptions, in a way, like on the tariffs, because look, now it's an interesting game. You're imposing tariffs. You're all thinking, wow, that's all. We're gonna make America great again and stuff like that. We're gonna bring business back to, or we'll force some of these big producers or factories factories and big companies to open up in the U.S. in order to overcome these tariffs. But actually, I think that there will be some exceptions done, and I think that this is how they're going to play. That in a way, certain companies will get the exceptions from tariffs. The rest of all the companies out there will be struggling. Will be, yes, having to deal with all the current imposed tariffs, but there will be a few companies which will kind of benefit, because they will get from the U.S. government. They will get those exceptions, and basically keep your eyes on the companies that could benefit. At this point, it is unclear who will get those exceptions. But in general, I think that there will be some sort of announcements. You'll have to just be very careful and vigilant and scan the news, and to see what's happening where, and who's maybe getting an exception or what. And because, like I said, this is where it's going to be like this, the element of favoritism, and those companies could perform quite well, I would say. So keep your eyes out there for those companies. And in general, the broader market might still remain more to the downside, but there will be those individual stocks that will move higher in a way. And not talking about only US. I'm talking about like some maybe Chinese companies, like so. At the moment, is like I said, it is unclear. I think everybody's still digesting. Everybody's still trying to figure out what exactly they can do, and if they can do something. But for sure, the general consensus, yes, it is a little bit of a bummer for the market. I think that yes, we could see some more declines, and this is where the Fed kicks in, because this is where the problem here arises for the Fed. Because look, I mean, at the moment, before yesterday, what we had was this, that the May meeting, yes, will have no cuts, will stay the same, and basically the same rate will remain in place, and that's it. But then what's interesting here, so by the end of this year, before we had only two of the forecast for two cuts. Well, we were varied between 2 and 3 cuts, but then lately we kind of shifted more towards 2 cuts. And now look at this. The idea for having 4 cuts is gaining, and it's really not far away from kind of the percentage here, the probability of seeing 3 cuts. So the 3 and 4 are almost aligned, and this is where, like I said, this is where, yeah, everybody's now turning their faces towards the Fed, and they want to see what they're going to do. Are they actually going to reiterate everything during the next meeting, during the May meeting? And then they will, for example, the Fed will say that, hey guys, you know what, we're going to go for 4 cuts instead of 3, because we need to support the economy. But this kind of will eventually lead to higher inflation at some point. But again, for now, yes, it's a tricky moment for the Fed as well, because again, if suddenly inflation starts picking up much quicker, then I don't think that they're going to go for these cuts. I think on the contrary, they will have to go for some, or just say that we're not really going to go for those 3 cuts, more maybe 2 cuts. So look, there will be some sort of like an aggressive approach at some point if inflation starts picking up rapidly. At this point, I think everything still will remain at the level where we will be trying to figure out, will there be 3 or 4 cuts or something like that. But if, like I said, if U.S. inflation starts picking up rapidly, then there is, like I said, then there's also a problem for the Fed, because they wanted to stick to some cuts, but now they won't be able to. Look, let's see. Of course, let's see what's going to happen, because again, what we're also watching is let me just refresh the page here. Yes, we're also watching tomorrow's NFP number, and the non-farm payrolls. Look, the current expectation is that there is a forecast of 128. Let me just double check again if has been updated. The U.S. There we go. Where's that? Where's that Friday? So yes, the non-farm payrolls. So look at this. We have an update that there will be more. The higher number, that there will be 140K instead of 151 previous. But again, look, what I would like to say here. Jolts this week came out on the lower side. Let me show you what I'm talking about here. The job openings. Here we go. There we go. On the lower side a little bit. Then we hit Wednesday with the ADP figure. Where's that one? That one, the ADP employment change came out on the higher side. It came out on the higher side against the forecasted 105K, and it came out at 155. So we have already like a little bit of a mix. Now, like I said, this number for Friday's NFP got also recalculated apparently, and now everybody's expecting 140K. Because if the number comes out actually on the lower side, below 140, then this would, like I said, this kind of puts the market in a bigger pickle in a way, and this is where the Fed will have to just really play the game here and try to figure out what they want to do. Or they want to go and continue cutting rates as quick as possible in order to stimulate the economy? Because, like I said, if NFP drops, this will be another negative for the stock market, and I think that this is where this is where the indices could actually start falling off the cliff. And again, something that the Fed will have to then try to stabilize, try to save. And at this point, the only tool that they have is, of course, the rates. Or promise the market that there are going to be more rate cuts. So at the moment, looking at the Fed Watch tool, we can see that yes, there is a possibility for even 4 cuts, but they will have to do this very quickly. Maybe even they will, if the NFP comes out lower, maybe this number could even drop lower a little bit, basically going for a cut in May. That would be something spectacular in my opinion. I think that would be something like a surprise cut in May in order to kind of support the economy. Because, like I said, the whole point is like if this stock market continues to slide, and like I said, if NFP tomorrow comes out on the lower side, that's a little bit of a bummer for the market and for the Fed as well, because they will have to just kind of step in with those cuts a little bit quicker than by the end of the year. So let's see how that's going to play out. Of course, ladies and gentlemen, looking at the dollar index here, we can see that yes, it is not loving the fact here, and this is the point where the dollar is not a safe haven. It's not seen right now as a safe haven, because in a way yes, the US is imposing tariffs, but actually it's going to be hurting its own economy. So this is where, like I said, the dollar is not really loving the moment here. The currency which is loving the moment, well, it's not even Japanese yen. Sorry, actually, on the contrary, it is the Japanese yen and is the Swiss franc. So apologies for that. But look at this. Look at this. Everybody's jumping into the Swiss franc. Everybody's jumping into the Japanese yen. I mean, this is, like I said, this is looking not very good. AUD JPY, which is our risk on risk off monitor, is also drifting lower. So still above a key area of support of the 91.85, but if it's a matter of time. If, like I said, if an NFP comes out on the lower side, everybody will continue jumping into the Japanese yen, into something a little bit safer. Talking about safer, gold. Look at this. I mean, we are selling off on the contrary, and this is what I kept on saying in my videos, in my live sessions, in my other videos. Basically, look, at the moment, what could happen, it could be a little bit of a mismatch, because gold is selling off in a way. Normally you should say, hey, but it should be going higher. Yes, it went higher. It went for a new all-time high this morning, 3,167 it hit. And now look at this. We're almost like well, a little bit more, $30 more, and we're probably going to be, well, we're not probably, but we're going to be $100 lower today. So from the peak, from the all-time high, and everything in one day. So the market is dumping gold in a way right now, because maybe people are thinking, hey, if the stock market does drift lower, I might actually jump into the stock market. I might actually pick up on some lower stocks, because the stocks which are lower, because I could play the game, because the stocks already are discounted. Look at look at MSFT, look at NVDA. These guys are a little bit got a little bit damaged, but the thing is, Is there like no value in these? No, these are cash rich companies. Amazon, look at these guys. Everybody's on the low. So this is what I'm saying. So people might pick up on that, and I do believe that some of these top companies will get those exceptions, will somehow have some deals done, also with some other companies abroad. So keep your eyes on that. Baba could be an option here as well at some point, but again, maybe they could still be hit a little bit more. Maybe we could see a little bit more retracement here, but do not exclude these top companies being in the list of exception companies. And that's what I'm saying. That's where people are. That's why maybe people are jumping a little bit out of gold and jumping in, or could potentially be jumping in some of the stocks later on. So keep that in mind. Again, this is just an idea. Let's see how this is going to work, because again, don't get me wrong, I don't have a crystal ball. I'm trying to come to this logically. So if you have any questions or any ideas of your own, do please drop them in the comments. I can pick up on there, and we can go basically from there. And yeah, we can have a little discussion or something. So, ladies and gentlemen, that's it. I'm going to wrap this one up. Thank you very much for watching and listening. I really appreciate your time. So, hey, stick around for more video updates from me, for more top news from my side. And yeah, we'll go from there. Thank you very much, and I'll see you later. Bye bye.